Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Thursday, September 1. Wow, we got the new month and we got Labor Day weekend coming up ahead. Also want to wish shout out to my son a happy birthday. He's just turned 8 today, and it's been a glorious 8 years. Last week we had 261,000 people apply for unemployment. Forecast supposed to go up to 265,000. Came in below expectations, but still went up a little bit by 2,000 jobs. So okay numbers. It's still under 300,000, which sets us up to quite a ways. I mean, last time I think we looked, we were around 75 weeks consecutive under 300,000 reportings. So decent number right there. We've been kind of in this 260 range for quite some time here. Productivity for the second quarter, we had a negative. We contracted 0.5%, and forecast was supposed to be slightly worse at 0.6%. And it did. It came in at expectation of 0.6% contraction here. And unit labor costs went up. So this is something I keep an eye on, as it could translate into inflation, higher inflationary costs later down the road here. So the last reporting came in at 2%. Forecast for this reporting came in at 4.1%, and it came in at 4.3%. So a little bit higher there. Again, this is something you definitely want to keep an eye on as unit labor costs go up. So does it helps also go into inflation, which brings in inflation numbers. So that's something we've been waiting for since it's been stubbornly low at the 1.6%, and we're trying to get closer to the 2% level before really the Fed will raise rates. Market PMI. This is manufacturing numbers here. We got two gauges here today. So anything above 50 on either of them basically are expansion. Anything below 50 considered contraction. So we're kind of just hovering there. So the market one came in at 52.1 last reporting, and it came in final reporting came in at 52, and then the ISM index came in at 52.6 during last reporting. And forecast was at 52.1, and it actually went to contraction. So not too good a number right there. ISM had a contraction at 49.4. Construction spending kind of disappointed too for the month of July. So back in June we had a 0.9% increase in construction spending, and there was supposed to still be some spending in July at 0.6%, and it came at nothing. So a little disappointing right there that nothing was spent for construction in the month of July here. So of course stock market's down, as we indicated the last couple of days here. As we've been seeing, anytime there's big news coming up that could possibly reflect a possible rate hike, investors, instead of putting it from one market to the other market, they've actually just been pulling out of both markets and holding on to their money until that news release comes out, and then they kind of start putting the money back into the market that they desire. So not only seeing it in the stock market, but you'll see it here in the bond market as well. So again, as I mentioned, it kind of concerned me that we're having these downward, we're starting the day off lower each time, and again, we did this 3 days in a row, which is kind of basically a start of a trend. That we're getting a slight trend downwards, which means basically interest rates go up. But today we're actually about zero from where we started off yesterday. But because where pricing came out, for the most part, we were up here a little bit, and it did worsen as a bit because most pricing earlier in the morning was based right up here, and as we're down here, basically it was lower from where we started off yesterday. All right, folks. So again, my feeling tomorrow with the big jobs numbers, I don't think we're going to have a great jobs numbers, but I don't think it's going to be one that's going to disappoint. So I think you're going to see something that's not going to, the stock market might not like it as much, just because it's not going to be something, I don't think it's going to come in surprisingly low like we saw back in May, like 11,000 new jobs created. But I do think, I don't think you're going to see it blowing over the top either. So I think it'll be something kind of in the middle there. Maybe close to forecast, maybe off a little bit, but my forecast will be probably in that range. And then I think the bond market will reverse trend here and probably improve as a result of it. Stock market may continue. Some of the things that could help us out is, historically, September is usually the worst month for the stock market. Typically, they show a lot more declines in the month of September than any other month of the year. August, as a result of talk about Fed rate hikes, most of the indexes from the S&P and the Dow actually were down for the month, which kind of beat the long streak of winning streaks that they were facing. So we could see a little bit of downturn, which we could see some improvement in the near term for interest rates coming up here very soon. So keep your fingers crossed, and we'll kind of wait and see as we get the news tomorrow on the Bureau of Labor statistics of the new jobs. All right, folks, have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.